Now, Sanlam Investment Management Global provides investment management services to individuals and institutions through several offshore funds. They focus on investing in shares that are priced significantly below their intrinsic value and aim to provide long-term capital growth. Sim Global has over $500 million in funds under management. Kokkie Kooyman, head of Sanlam Investment Management Global, joins us from our Cape Town studios. Kokkie, thanks so much for your time. Just a minute ago, off air, Kevin was telling me that he hates Europe. How do you feel about Europe?
Yeah, no, Europe is a bit of a nightmare for investments at the moment. I mean, your main problem really is it's cheap, but the end game isn't over. So there are still too many imponderables that you just don't know the extent to which social unrest will have an effect. You don't know how that will run. You don't know what the rescue package that's going to come still for Spain will cost, how it will affect Italy. But sure, there's a lot of value appearing there, but we're still on the sidelines regarding Europe.
Kokkie, in terms of your Best Ideas Fund, I find some interesting dynamics in that, in the way in which you break it down. And one of the components that stands out is your sort of protection component, protection against what you call catastrophe. How are you approaching that in the fund itself?
Yeah, it's a bit of a misnomer, but it's actually, it's the insurance sector that protects or that insures against catastrophes. So it's a lot of names that most investors most probably haven't heard of: Lancashire, Amlin, Catlin, and then SCOR in France. But effectively, why they're quite defensive is that the dividend yields are about 7%, 8%. They're significantly priced below where they've been for the last 10, 15, 20 years. And it's one industry in the world where there are winds in their back instead of winds from front. In this regard, if you just think back to 2011, you've had huge catastrophes. You've had the earthquakes in New Zealand, in Japan, the floods in Thailand, record hurricanes. Well, sorry, it was more the tornadoes in the US. The records, the hurricanes were actually okay this year. But you've had record payouts. And the industry is still very uncertain about whether you'll have a bad 2012. And our history shows when you've had a few bad floods and earthquakes like that, it doesn't repeat the next year. They come in spates of sort of every 10th, every 9th year. So the sector has quite a bit of pricing mechanism, and it's very cheap.
Kokkie, just to help us understand your view on the banking environment at the moment, you have chosen 3 banks in different territories. You mentioned Thailand and Japan right now. So let's talk about Kooyman Bank in Thailand versus SMFG in Japan and the Bank of Ireland, to throw some light on your financial thinking.
Yeah, I mean, I chose those 3 because I've just visited them, so it's always nice to talk about things that you've just seen. But the reason why we visited them is they're amongst the cheapest banks in the world for different reasons. Now, it's fascinating if you look at Kooyman Bank in Thailand. Now, Thailand is actually one of the stronger growing economies in the world this year, about 5% GDP growth. And partly it is because of the floods last year. So they're recovering from the floods, then your economy grows strongly. But it has been an economy that grows quite strongly, 3, 4, 5%. Now, Kooyman over the last sort of 12 years has consistently grown its capital, the return on its capital, at about 20% per annum. And all our forecasts show and our work show that it should do that again. But it's priced at about 2.2 times price to net asset value, which is above the last 10-year history. If you go the other extreme, Bank of Ireland's now trading at 0.3. So just remember, Kooyman was trading at 2.2 times its net asset value. Bank of Ireland's trading at 0.3. And Bank of Ireland is not a forecast by us to make any growth in its capital the next 2 years, but thereafter it should grow 5%. So Bank of Ireland, the last 10 years, the average trading range has been 1.2. So it's trading significantly below its trading range. And that is exactly the point that was made earlier on Europe. You've got extremely good value there. Bank of Ireland 0.3, but it's not generating any return on this capital at the moment. So your uncertainty is how bad can it still get and how many years before it returns to normality. Kooyman Bank, excellent bank, very good growth, but it's in the price. And that's the conundrum for many for us specifically. You've got a lot of companies, great companies. Kooyman Bank's actually not that expensive compared to some of the Indian banks or some of the Brazilian banks even. But good bank, good growth, but it's in the price. And then you've got Europe, lots of problems, but very, very cheap.
Kokkie, are you then obviously favouring the banks that are able to exhibit better returns, even if they're perhaps a little bit expensive? And if that's the case, are you still not interested in South African banks?
Now, let me answer the last part of the question first. Yeah, South African banks are just still too expensive. I mean, Standard Bank is trading at, let's say, 1.6. I think First Rand has gone back to 2 or above 2 times. So First Rand is rated the same as Kooyman Bank. And our First Rand is a brilliant bank. I mean, make no mistake about that. But our economy just hasn't got the same growth dynamics as Thailand, and it's got significant headwinds coming up. I mean, the labor cost in Thailand must be about a third, I think, of what it is in South Africa for one. Its exports are growing. It's a hub. We're right on the south point of Africa. So on the rest of the banks in the world, you know, it's very difficult. You've got the US that looks quite good, but you're not quite sure if we're going to tip back into a recession or not. So what we do, we tend to focus on banks that generate good returns, and there are many still available, and where it's not quite in the price. And those tend to be the smaller banks. So that's why I chose Kooyman. There's another bank in Thailand where we've been investing in Tisco, which is actually at half the valuation, 1.1 times, same return as Kooyman, but it's half the market capitalization, so it's a lot smaller. So in our funds, you'll tend to find, you know, smaller players that simply are mispriced because they're not known yet. A bit like Capitec was for many years. It was totally mispriced. Nobody knew it.
Kokkie, just to drill down further into the financial exposure in your Best Ideas Fund. Now, 22% is emerging market banks or specialist lenders.
Yep.
Other than Thailand, what
Yep.
are the other hotspots that you can throw forward to at the moment? We had Chris Harton here from Investment Solutions, having just come back from Brazil. Is there any opportunity there?
Yes, I unfortunately couldn't hear Chris, but I could see from his body language he doesn't like Brazil. I'm not quite sure if I got that. We don't like Brazil at the moment, although it's got a lot of potential going forward. But Brazil is going through a phase in its economy where they've got to make some tough choices, and you know, I don't think the current government is making the right choices. So Brazil, the banks have come down a lot of value. You've got Itaú there, a very good bank. But it's a bit fairly pricey. You've got Banco do Brazil, the government-owned bank, very, very cheap. And we own some of that. But for the rest, what we've really done, we've got a lot of banks like, let's say, Tisco in Thailand. We've got quite a few in India. India, the banks are still very, very undervalued. We've got 1 or 2 very good banks in Korea. Turkey is another country we like quite a lot. That economy has grown quite strongly. The banking sector is still very underpenetrated. And then interesting, something in the US World Acceptance Score. It's a lender, as they call, lending in the unsecured space. So it's a bit like a Capitec or an African bank. And it's done remarkably well. You can imagine in this phase of the economy the US is going through, it's doing well. So, you know, we've got a bit of Turkey, got a bit of Indonesia, got a bit of India, Korea, and then the US. But at the moment, very little Brazil.
Kokkie, can we just move a little bit away from the banks for a moment? In the rest of the fund, you seem to have quite a lot of exposure in the technology space, both emerging, developed. Can you just highlight 1 or 2 areas there?
Yeah. two extremes. Our biggest holding in the fund, in fact, or the two biggest holdings, the one is Microsoft, which is extraordinarily cheap, we think, at the moment. It sits on a lot of cash. It's a very predictable earning stream. If you just think of you know, especially Windows 8 coming through, if that's successful. And it's on a P of, I think it's 12 now. 10 years ago it was on a P of 80 when everybody was tech mad. We've got a small little tech company listed in Hong Kong, DBA, which has done extraordinarily well. It made up for a lot of other mistakes we made. And then interesting, the other tech company we've bought when it came down a lot is Hewlett-Packard. Now Hewlett-Packard is now on a P of 5. It's got new management, rectifying the mistakes of previous management. So there's uncertainty. You've got a strategy that she's been very honest, Meg, and she's laid down the ground rules as how she wants to turn around the company, and we've taken the bet that she'll succeed. You know, Hewlett-Packard is a massive company, brand is very well recognized. It's not like Nokia where you're competing for against an Apple. You know, it's something that has got a better brand name and very cheap. So that's more or less what we've done on the tech space.
And Kokkie, just in conclusion, if I was to try and assess an underlying theme in your best ideas fund with your technology exposure, your retail exposure and your financial exposure, it would be very much around the consumer story and what that holds for us going forward. Would that be correct?
Yeah. Yeah, we focused on the consumer, but then more, you know, the stable consumer spend, but not the staple foods. If I can, you know, the Unilevers, Colgates, you know, all the really defensive stuff, because that's very, very expensive. So we've tried to focus on those that are more defensive, but still undervalued, and are actually, except Hewlett-Packard, maybe companies that are well run.